I would like to call Mr. Pulkit Goyal, CFO Honeywell Automation India and India Controller Honeywell. Mr. Pulkit Goyal is a strategic and result-focused chartered accountant with an entrepreneurial and creative business style and a redefined capability to engage stakeholders and collaborate with boards in process improvement to navigate complex finance, regulatory, and organizational issues. Can we have a huge round of applause for Mr. Pulkit Goyal?
A complex topic, and I know most of you think or are thinking that how the heck ESG is relevant for the tax folks. I will not ask you to raise your arms. I have seen, most of you don't want to, so I'm not going to do that. So, yeah, initially I used to think it the same way. But from my perspective, it's an extremely relevant topic. And while tax colleagues may be, behind the scene when it comes to implementation, but now I'm going to share a couple of slides. And then we'll come to, how do I think they will be the torchbearer when it comes to, ESG compliance. But before we do that, let me give a quick introduction. So I can see the slides, but others cannot. Oh, it comes here, thanks. This is my background. Mitali already mentioned, I'm right now the CFO of HALE and also controller for rest of Honeywell entities in India. Before that, I worked with other industrial diversified conglomerates, starting from ArcelorMittal and TK. And I started my career with consulting firms in audit, that is BDO and EY. Back then, BDO had a tie-up with Lodha and Company. So I have varied experience. You must be thinking, well, what a switch. I always loved the industrial sector, and that's the reason. And I like, the diversity of the industrial sector. You're not just selling, one thing. So, quite interesting experience that I got. Coming to, before we get to, how tax team can help, I wanted to state some of the facts, so that the discussion is really very objective. When it comes to ESG, I'm sure you have seen in the newspapers, also on the websites, and so some of the companies also have in their corporate offices, big posters stating net zero by so-and-so date, or so-and-so year. Have you seen? I think most of you have seen, correct? Do you know? But countries target, I believe you're also aware, India has target to be net zero by 2070. Now, as we speak, only about a third of the businesses in India are actually thinking or preparing themselves, for ESG. So you can imagine the difference, huge difference or delta that we have when it comes to ESG compliance. And I'm only talking of corporates, by the way. I'm not even talking about, the non-corporate entities in India. And when you go further deep, only a 15% of their suppliers or service providers are actually prepared. So you can imagine how big the delta that we have when it comes to ESG readiness. Another one, I think we have spoken about it, that's the country's target. Country's target means that all of us sitting in the room and also outside have to be net zero. That means our negative contribution to the environment has to be equal to the positive contribution as well. I think net zero, you understand, all of you are finance folks, so you know that, it has to be a balancing figure. The third element when it comes to ESG, India has, by 2030, agreed or committed to reduce the carbon emission by almost 50%. These are startling numbers. We're not talking about 1, 2, or 3. We're talking about the entire country. And carbon emission, of course, the major contributor are vehicles or transportation industry. but also many industrial sectors, and of course I belong to one of them here, have a huge responsibility as well to contribute to it. And last, fact on the ESG. I'm reasonably certain you may not be aware of this. Are you aware that we have something called a green tax or eco tax or environment tax, carbon tax, whatever you call it? India has already introduced it. Were you aware? You were. Yeah, so it was introduced, I would say, less than a year ago. Currently, it's applicable only on, I would say, transport, I think vehicles, the personal vehicles, and some commercial vehicles as well. And while, of course, other advanced economies, especially in Europe, had introduced this green tax a few years ago, but the contribution of that green tax is gradually going up, and right now it's still quite low. You can also imagine this is a new entrant in your worksheet or your tools, as a green tax very soon. So I think these are some of the things which I wanted to kind of let you know, just to prepare you for what are actually we're talking about when it comes to ESG. Couple of news cuttings, a few news cuttings. It's, I think every day, if you read the print papers, you'll see at least one article on ESG or our Indian version of ESG, that is BRSR. So there is enough that is being discussed and said. Now when it comes to, how we can help or how tax function can help, in my view, I strongly believe that tax policies will be the driving factor when it comes to accelerating countries to be net zero. And let me give you one example. Why do I think so? I'm sure all of you are aware of CSR contribution, which was introduced incidentally 10 years ago, a decade ago. Personally, if you ask me, that's a special purpose tax, which actually none of the countries have it. Why was it introduced? And if I recall, I think right now, total CSR investments or contribution is to the tune of around 15,000 to 17,000 crores. It was started in fiscal year starting from 1st April 2014. Numbers prior to that are not available, but because it was not reported in a uniform way. But when it was started, I think it was almost a third of it. Why do you think that route was taken? Anybody wants to take a stab? No one? Okay, let me answer. The reason is it's always easy to implement such measures through top-down compliances and making them mandatory. Even CSR regulations are very clear. They say, pay or explain. That why can't you pay? And that's the reason why I think tax functions in very near future will be at the forefront of implementing ESG compliance in the country. In addition, another element which is gonna impact all the tax professionals is the huge investment that will come in a parallel, if I can use the word, green economy. I mean, look at the numbers, mind-boggling numbers, which will be in the range of $7 trillion to $12 trillion. This is gonna be the new economy, which we haven't experienced as yet. Most of the products that we are buying have now a green tag or an environmental responsibility, cast already on the companies. Here, and that's basically my, approach to kind of explain to you as to what do I think can be done when it comes to ESG. The first one, when it comes to ESG, we narrowly limit it to only environment, carbon emission, greenhouse gas emissions, etc. But ESG is much, much beyond that. One element each one of us are already well versed with, that is governance, the last letter of ESG. which is also akin to compliances. E is environment, that also we are fully aware. But another element we kind of miss is social element. So ESG is not just limited to reducing the carbon emissions or the carbon footprints, but also being socially responsible when it comes to minimum wage payments, when it comes to ethical practices, that all also sits under social. These are all being already measured. If you pick up any annual report of a public company, you will see the ESG report or BRSR report is clearly explaining in each of these three elements how a company is faring. So that would be my first suggestion, that when you go back today, I think start thinking about what is the ESG strategy of the company and how US tax function can integrate in it and help. Second one, the data insights. Here, my kind of recommendation is, as I just mentioned to you, green tax, which has been implemented last calendar year end. You will also have to figure out, what all benefits are available for each of those three elements, E, S, and G. What are the tax breaks or potential tax advantages that companies can avail, as they transition into the ESG compliant, structure. So that is going to be another element where tax function can help a lot and help companies to save the taxes. Third element, I think also on the education side, educating our supply chain partners as to how they can, because without their participation, our ESG compliance will also not be where it should be. And the last element, before I get to the other three topics underneath, is on also unlocking finance by supporting ESG compliance and unlocking, the green financing for the company. As I just mentioned to you, there will be a time very soon in future where even financing will become expensive for the companies which are not ESG compliant, and it applies to both and in large corporates as well as mid-size and the small ones. While, of course, large corporates are already moving ahead faster in that direction, this challenge is going to be much bigger for the SMEs. So I think this is also our responsibility as large corporate to kind of support our supply chain partners there. And the other three elements here are more on, people side, that is basically, hiring the right skill set and the talent. That's going to be the key. You need to get the talent which will support you in this strategy and they understand, as well as completely re-innovating. And that brings me to the second topic of process. As companies will pivot themselves, to the ESG compliance, their entire business model will undergo a, significant change. If I just give an example here of, for example, the automobile industries. And this is one of the biggest topics that we have. As I mentioned to you, they are the biggest contributor. The transport industry is the biggest contributor to GHG emission. And the famous debate going on already from ICE engine to electric engines. And this, from my perspective, especially for the companies who are already in the combustion engine production, will have to complete. Imagine the amount of change that they will have to do. And there will be many such operational changes in each of the companies where you all operate. So tax has to immediately get involved and understand and participate in that transition, which is, of course, not only ESG compliant as well as cost effective too. For example, tax will also have to make and drive the responsibility from other functions. For example, when I talked about the social element of ESG, where topics like minimum wage payments, also diversity, inclusion, these are all part of the social elements of ESG. While they do not directly sit under the tax responsibility, most likely under the HR function. However, tax, to be able to pass on the benefits of the government incentives, will have to really take charge and see that these processes are working and there is no non-compliance there. And last but not the least, I think we have already spoken a lot on this, using technology to further the ESG cause. Yeah, I think you have already alerted me. So maybe I use a couple of minutes. If any one of you have one question, I don't want to have it as a monologue, but if any one of you have a question on the subject, I'm happy to answer now, or we can do it also later. Okay, looks like not. Then thank you for listening to me.